And also in the light of layoffs, OnePipe, a Nigerian embedded finance startup, also laid off, although they have a small team. The number of layoffs also made up like 20% of its staff, and also its economic situation. But they said it has nothing to do with SVB shutdown, which we mentioned last week, I believe. And OnePipe is one of the Nigerian startups that confirmed that they had funds in SVB, but they said they've been able to access it. I don't know what that means. Maybe they've been able to withdraw it, or they just have access to it. Anyways, they say it has nothing to do with that, but they are laying off, and hopefully they are planning to focus on the only important things that they are doing, not just trying to do a lot of things at the same time. So I'm wishing OnePipe the best. But in the midst of all that, we heard that OnePipe also raised, but their race is confusing. So, because you tell us about the race.
I mean, it's not really confusing.
If I say it's confusing, is it or confusing?
Sorry, ma.
Okay.
Anyway,
explain to people like me that find it confusing.
So OnePipe got a $4.8 million credit line from TLG Capital. So basically, it's like a loan that they can repay. Okay. So that's why I said it's not confusing. It's just terminology. It's just a loan that they can repay. So they will be using it to focus on inventory finance. So most of us would know OnePipe for open banking. They are probably one of the few, they're one of the few open banking startups in Nigeria, and it appears they've been providing other services, and they are going to be doubling down on inventory finance for small businesses. So makes sense, because inventory finance is a big deal. We've seen a lot of B2B e-commerce startups that they've been offering something similar, basically buy now, pay later. But now they are financing, and I think Remedial Health does that. I've seen a few health tech companies who are doing that for
pharmacy lines.
Yeah, for pharmacies. So it makes sense that they're doubling down on it, because maybe the open banking isn't. I mean, yes, the CBN released guidelines a few weeks ago, but it will take a while before the actual operations come into play. It would also be a long time before you can seriously make money from it. So with the uncertain economic conditions, it just makes sense that you double down on what is already working and just stay alive to...
So it appears the said uncertain economic situation is taking a toll on the funding market, on the African funding market, or is it a global thing?
So I've not looked at the numbers globally, but since February, I think the second week of February, I've noticed that there's been a serious slowdown in funding. So February had 670 something million, and more than 400 of it went to just one company. So it just shows you that there was funding in February, but it went to, more than 50% of it went to just one company. So it shows you that there's something wrong somewhere. And I thought it would just be maybe the last few weeks of February, but today is the 23rd, and it has continued. So if you go to the usual suspects, you may see one funding news, and then 7 stories, one funding news, another 8 stories. So it's been irregular, and it's unclear whether what we are saying is a result of the whole SVB issues. I doubt it highly. But this could also be Africa finally getting a taste of the venture capital slowdown. So last year we made a lot of noise about how Africa was relatively unaffected.
Yes, but I was looking at the chart, a global chart, looking at Europe. It's reduced in Europe, reduced in North America, reduced in Asia. It's only Africa that didn't get reduced when it comes to venture capital.
That chart shows that, but in reality, we actually suffered as well. So 2021 was 4 billion, I believe. And everybody was saying 7 billion was where we were going to. But even the most optimistic projections or most optimistic numbers, and I'm talking about Patek, had about 6 point something billion. So we didn't even hit the 7 that a lot of people we're projecting. But if we are now being a little bit more conservative, if you take the 4 billion that the majority of people reported in 2021, African startups just did about 5 billion, also between 4.5, 4.6, 5 billion, depending on who you're asking. So that just means we barely had I don't know the exact numbers, but the growth wasn't much. I mean, going from 4 billion to 5 billion is really not a lot. And in the context of global venture capital, we are still raising significantly less than I think 2% of what every other person is raising. So we've been suffering since last year, but it looks like we're now seeing it this year.
And this is really telling on companies that are heavily dependent on venture capital, on funds, companies that are not yet making profits, or that are paying the salaries of their employees with venture capital. So which means, like, you know, if you remember months back when we were talking about Kune, is it Kune, that cloud kitchen, cloud kitchen, and the next thing, when we heard that, when he couldn't raise fund overnight, the next morning he just declared that the company has shut down. It sounds so surprising, but these days like the normal thing, because if you can't, some companies don't know where they will get the next recurring expenses from, and it's just terrible.
I think things are about to get will probably get worse, because looking at the economic outlook, like some of the projections we've seen made by the IMF and organizations like that, things are bound to get worse, because things are ready, because they projected that people's earnings will slow down by a certain percentage, and then what is happening is currently worse than their projections, right? And now it's looking as if it's the companies in the West that are having it harder right now, but
in the real sense,
it's going to come back to Africa, and it's going to be worse, for emerging markets at the end of the day. So I know
you have to spell doom, but
I mean, so it's not really
companies just have to.
It's not all doom and gloom.
Okay.
So it's a good thing and a bad thing. So when I speak to a lot of founders or investors, they usually say like to separate the boys from the men, and I agree, because if your business model was entirely dependent on venture capital to survive, then you have to be rethinking. We've been talking about exits for venture capitalists. What does that look like for them? So now they're going to be thinking about it. Should I be looking at engineering a sale of one of my startups? So they are going to be, we would see a lot more M&As. I mean, we already saw Fair Money do one last week, if I'm correct. I think last week. So we're going to see a lot more. Funny thing is that I'm not seeing a lot of it in this part of the world. It's usually the Middle East. So companies are probably going to be smarter in the way they allocate capital, either for either for marketing or for just creating new products that they just want to flex with. But something that is very interesting is how it would possibly impact salaries.
Well, just to mention that in the midst of all this, the crypto market is doing well. And
so please
let's move on to the next thing. Let's talk about which agenda are you trying to?
No, I'm just saying, like,
you say you give glory to God.
Crypto market is doing well. Don't worry.